It does take us to our talk of the tape, the ugly beginning to fall trading and what it might mean for where stocks can go from here. Let's ask Adam Parker. He's the founder and CEO of Trivariate Research, a CNBC contributor. He's here with us at Post 9. It's good to see you again.
Always good to be here.
You've been warning us, I think, for weeks here that maybe the market was a little too optimistic. What is this about today? Anything? I mean, you can't make a whole leap over one day, but it's an ugly start to a typically bad month.
You know, I could argue I'm a little surprised this didn't happen 2 or 3 weeks ago a little bit. You know, the recovery from August 5th was sharp. I see a bigger than normal inconsistency. The Fed, what's in the price is 8 cuts in the next year. If we have 8 cuts, I got to assume that means the economy's slowing, unemployment's rising, yet the earnings estimates haven't moved lower at all, right? And I think at some point you have to, well, they have to true all the way up, but they got to close the gap a little bit. And so I think people come back in September, as we talked about, and they're going to get news that's probably a little bit that the consumer's slowing and that the data indicate the numbers have to come down some. And I think that's, you know, maybe that's a consensus view. I worry everyone thinks September's going to be bad.
Well, I mean, 8 cuts doesn't it get you back to normal?
It does, but why would you do that unless you get consistent, data that things are slowing?
Why wouldn't you just want to get back to normal?
Well,
I mean, you raised so much that the rate now relative to inflation, I think most people would say makes no sense.
Right.
So they need to get it back to whatever level of normal. And 8 cuts, 25 apiece, that doesn't sound like some crazy amount of cuts that has to mean that the economy is so horrible, does it?
I don't know. I mean, I don't know what normal means, right? I mean, if we had this conversation 10 years ago, we'd have said the 10-year should be at 5 and the 2-year should be at 2.5 or 3, and that's normal, right? And market should be at 20 times. So we're just all disconnected from normal. I think most people are looking around saying, we talked about maybe do you fight the Fed this time? Because in the past, when we've gotten 25 or 50 bips, we got it with balance sheet expansion. We got it with some incremental fiscal. Mm-hmm. And I think people are looking out next year saying things are slowing, stocks are up a lot. I look at today and it makes sense to me. Small caps are underperforming. We've talked about that like 10 times. How does everyone think small caps can outperform in a down tape? I mean, this doesn't surprise me at all. Of course they shouldn't outperform a down tape. If it's a risk-off trade, they get sold. Growth stocks, people are going to play them with mean reversion, right? You got a huge recovery. Look at NVIDIA, 140 to 98 to 125. Like, the recovery was big. Ultimately, I'm very bullish still on the whole AI deployment, but I'm not surprised that when margins peak, you get a little question about CapEx war, that you're going to get a little bit of a retrenchment. So I don't actually think today's all that surprising, to be honest with you.
All right, so you think margins have maybe peaked?
Yeah.
Are we just at the beginning stages of an earnings recovery? So are we suggesting that earnings in the current cycle have peaked also?
No, I don't think they've peaked. I just think right now the market's ahead of the Fed by a lot, right? The market's saying, I know I'm going to get stimulus. I think the market's telling you earnings bottom Q1 maybe and accelerate through 2025, and you're already willing to pay for some, not all, but some of that recovery. So to the extent that you get a little afraid the recovery's pushed out or it's a little muted or things are a little bit worse before they get better, you can have a correction. Look, we're still at 5,500 and change. We're still up meaningfully from sort of the low, so it's not like one day corrects at all. I think, as we kind of said, look, same chance of 10% up as we are 10% down. I think there's things going on. I think healthcare is interesting because it's outperforming in a down tape, and maybe it can participate in an up tape. I'm probably more bullish on healthcare than I was 6 weeks ago, 8 weeks ago.
Well, you're skewed more cautious. So the healthcares, the staples
and
the utilities, the things that are the only areas of green today, and now healthcare has even gone red in and of itself. People would look at that and say those aren't exactly the pillars of strength that you want to hang your hat on in this market.
I'm a little bit mesmerized right now by healthcare because I just took this course. I think I told you, AI for healthcare, and I'm like the new analyst who everything sounds awesome to, I guess, but I'm like wildly optimistic about what can be deployed there over the next 3 to 5 years. So I'm trying to think about whether it acts okay on a down tape, but maybe it can start over the next 12 months participating in the up tape, and all of a sudden you've got a sector that's one of the leaders for the next few years. So that's probably a new thought for me. But there's no doubt, as I sit here today, we did our call, we do the first Monday every month with investors this morning, and it's like you can't quite true up the fact that estimates are 15% growth next year haven't come down at all in the last 2 months when overall trends are slowing some.